Hey, Don. Just you today so far.
Hello there.
How you doing, sir?
Well, I was better yesterday.
Yeah. I thought you had a whole bunch of calls like at the bottom.
Mhm. I I had a very good 2 days and then gave some of it back today.
Yeah. I gave pretty much everything back yesterday. I thought it was gonna head just a little bit lower, and then I got
Yeah.
screwed for the proper term.
Well, they're still in that buy the dip mode. So
Yeah.
as soon as it hits the key level, they're going to buy it up until it's proven otherwise.
Yeah. So I've been kind of looking at this here. So I guess we can get rolling here. So there's plenty of time. Yeah, let me pull up some stuff here. I'm not going to spend like too much time on equities just because there's so much stuff going on in other places. But here, I'll use my main chart here. All right. So I still think that this is a realistic possibility. You can kind of you still see this ascending wedge thing that's breaking down. So we still have like a decent oops, sorry, I grabbed the wrong fib tool here, but in theory at least, you could consider this like some pattern expansion, but I don't really think it is. I still think that they're buying the dip. But I still think that we have just a little bit more room here. Like the 50, sorry, this is the S&P here, but just to use this as like our baseline here. We probably could head up just a little bit more, but once I draw the fib levels, it might be a little bit more clear. Let me just take all this stuff out of there. So as of yesterday, that bounce that put us right here at this 6450 level, and then we had in my opinion, it was a pretty strong rejection today. If you zoom in here, they put it at like the 30 minutes.
Well, we went right to the 6450 and then it hit the wall.
And then it pretty much bounced right back here. And it's kind of funny how these things align with the timing of it all. The trend line's a little bit screwy here, but I think it's probably more fib based than like a trend line bounce. But in my opinion here, whenever you see this sort of thing, this sort of like, to me, this means that there's a lot of interested sellers up here. And if you look at, if you zoom out and look at some of the higher sell delta, you can see here that we've got a lot down here still, and you still got this bit up here. Now, there's some buyers down here, of course, with what was going on today, but we still have that volume profile where this overall, this like 6382 is still an important level. We can't, bears can't quite seem to get much below that. But I also kind of think like there was, it's almost like the bears were selling and then they just kind of turned it off. So if I go into a deeper dive here, you can kind of see here that there's this like 5-wave sort of, it's really fast. But if you zoom in down here, you still make sense out of the 5. So it makes sense that there was a 5, and then also too, you typically would see like if it's a zigzag sort of correction, we can kind of pick out like a truncated C here, or you can make the argument that it's like we have a longer C leg, but then there's a pattern within it. So typically this would be that B wave of a longer term sort of, not longer term, sorry, but this would be like the B wave of I'm still kind of standing by this. So hey Mark. So I'm still kind of thinking here that we have this B wave top here. Now, I mean, of course, we could see something, 1 second, let me back it up. Of course we could see this like this little bounce up here, and then of course frustrate all the bears and head back up to this like 6,500 zone. But at this point, I think it's a little bit of a stretch if they're going to get through this or get through this like 6,450 level. There's a lot of gamma. There's a lot of concentration up there. If I pull up the chart, 1 second, if I pull up Nasdaq, you see how we got a lot of this call wall up here at this 23,700 level. If I head up to SPX, sorry, no, I'm jumping around here. And this is today's options data. So if we hit this there's a lot of options gamma up here as well. So like this, like I said, this 6,450 level seems to be pretty sticky lately. So if it does materialize, kind of heading back to just the the normal chart here, this I'd say is probably the most bullish scenario where you head back up to this like 6,500. But it is September. So, and there's this, and as you mentioned, there's big liquidity drain. So I still want to be careful and not just go off the rails and say, yep, we're shooting the moon here. And one of the reasons why I wanted to bring that up here is to kind of show you guys so if this is a zigzag, where we have this 5 waves down here, a little bit tough to see. And we do have a little bit higher of a B wave. I kind of think that this might be like the wave 2 here of this larger ABC. So as an example, of course I don't want to bet the farm on it because how many times have you gotten your face ripped off as a bear? But let's say we kind of stall out at this 6,450 level, which I think is probably likely. The rally into close here seemed a little bit like there was no resistance, like there was no trap. And if you're looking at some of the data throughout the day, and Mark, I did see some of your charts with like the VWAPs and things like that. Yeah, I was kind of thinking here that the price action's real spiky, I guess you could say. Like there's lots of bigger lot sells. There's a sell spike here to test support. And then if you look at this level down here, you can kind of see that there's just nothing but, it wouldn't say it's indecision. It's more like accumulation and distribution at the same time. Just trying to, keep the prices pinned for a minute under this longer term trend line. And if you pull up the Nasdaq, it's kind of like the same thing. So to me, that's like the end of a wave 1 sort of thing. Like they wanted to hit a target. You see a lot of these bigger lot sells at the minute level. So to me, it looks a little bit trappy. There wasn't a lot of volume up here, as opposed to below where you can see it was very sell heavy throughout the day. So if we do some measurements here, I'll head back to the S&P. If we do some of these measurements, it kind of looks like an impulse or a really long C leg. All right, so let's measure this out. Let me get out of the weeds here and go back to like 10 minutes. All right, so if this does materialize, I think there's a pretty strong chance here. Let me get this out of here so it's a little bit more clear. Because you typically don't see these longer term trend line breaks unless there's weakness there. And to be fair, we've been grinding for quite some time. And the bulls have this nasty habit of buying every dip, but I still don't think this is like the actual dip. Like there's a bit of a micro dip today, but all right. So anyways, so let's kind of illustrate this out. So if you see this, if we do have some sort of, if it's like a ABC or a 5 wave count, we're not quite sure yet. But I do think what we could see as something realistic is an extended third wave, and then something to finally test this 50-day moving average here. So there was a lot of gamma at this like 63.30 level. So right around here, and it kind of seems symmetrical for like a 5th wave. But we could see maybe a little bit more like that, but that's sort of like the I don't know, base bear case, I guess you could say, if they do manage to kind of break it down. And this is just an illustration. Like, you know, of course we want more price action first. I mean, I don't want to commit to anything bearish unless it's confirmed. And if it is confirmed, what I'd like to see is, you know, it move a little bit faster. So today was just a pretty painful grind, especially if you had like options, you know, with your time ticking away with that. So there's a secondary bearish scenario here, like a base case, where you could see, and I think this is probably the most likely, where we see you see a little bit more of a visit back down to the 6,400 level. You know, you did have a lot of buying yesterday in the close. Same thing with today. But I mean, if you look at what happened today, you did have a retracement, you know, by 0.382 before we did have this move higher. So I guess it kind of remains to be seen here on you know, whether the bulls can make a new local high. But this is probably I'd say my favorite bear case scenario at this time. I think that like the 5 wave is something that we could see. But I'm also kind of thinking here that if we do see this you know, kind of minor bear scenario, then you know, we could see some sort of like wedge develop where you know, we could just keep chopping around here for another minute or for another couple days and see something kind of like this, where you could have that, like that head and shoulders kind of thing again. So I mean, I'll stop there. I think that's probably like the least impactful bull and bear scenarios. I think just a little bit more of a grind, because I mean, it does kind of look like distribution overall. Like if you kind of zoom out here, you know, we've got this ending diagonal sort of view, and I included the trend line for that. But you know, if this is like a continuation of that, we should see just some more grind here, where we could see, you know, that final, well, I guess you could say like that final 5th wave. Well, it doesn't even measure right now. Yeah, so something like this, like 65.50, I think is something that you might see from like a longer term bullish scenario. So to kind of recap, it's like this is like our, you know, uber bullish scenario where we hit that like 65.50 level, and that might be like towards mid-September, or you get this continuation tomorrow, where kind of showed you guys before, where it's like this extension of the third wave down here. I mean, I don't think that would be it. It's just kind of an estimation at this point until you have more price action to go off of. But I don't want to, like I said, I don't want to commit to that unless I actually see it. I think the most likely scenario is we just kind of grind down a little bit and, you know, kind of bide some time until we see what happens with the Fed, with their proposed rate increases and things like that. So yeah, I mean, what I'm looking for tonight is really just a new local high here. And even if there is a new local high, it probably won't go very far. And I think the bears will probably step in tomorrow, or Friday at least, because I think we have what is it, jobs data? Yeah, okay. So we got non-farm payrolls and unemployment. Unemployment probably won't move. I don't know why, but seen lots of layoff news lately. So that's kind of what I think it's going to be here for like the S&P. For the Nasdaq, it's a little bit different. Whoa, holy crap! Look at all those lines. It's not like I was trading or anything today. This one's a little bit more pronounced. I think this one has a stronger bearish case here, where you know, we got that. Like I said before, we got this like pin bar sort of move here as soon as we hit this 0.618. Even if it was exceeded a little bit, I mean, that's, you know, it's fine. Typically doesn't reverse right at the point anyways. But this 23,450 level seems about as important as that 64.50 level that we have for the S&P. So this one, I think we could see probably a little bit more of a sell-off, where we could see like a wave 3 that breaks it and heads back down to, you know, I guess here, let's measure it real quick. It just kind of like looks like a zigzag to me. I don't know, it's kind of weird to, you know, it's kind of, yeah. here we go. So like I'd say base case, like your 22,700, 22,726. If it actually was, here's what I actually think might be interesting here is that, so you kind of like, you can pick out this, like this 5 wave up here, and then you have this sort of weird looking ABC up. And then I'm thinking that from like you could have a much larger wave. I mean, I'd be pretty extended wave, like a pretty extended wave 1, that kind of thing. But I mean, I don't think this is going to be realistic now, at least. I mean, there has to be some sort of catalyst, and this won't be just like a 1-day kind of move. But I do think that we could see some sort of zigzag materialize here. And if we zoom out from like a wave count perspective, sorry, I know the counts aren't scaled correctly, but if I zoom out just a little bit more, like you could make the case here for like an ABC over the entire range, or like a 5 wave with just an extended 5th wave here. And I'm certainly open to suggestions and feedback and stuff here. This is not like a definite thing. A lot of this stuff is subjective. So, anyways, I think you can pick out like a pretty clear 5 wave in this last cycle that we had from June. And, we had kind of like a lazy, like a wave 4 sort of thing, like kind of a weird truncated flat. So I mean, there's more than one way to skin a cat here, but if this is correct, where I think we've been talking about this for a while, where it's like an irregular, where we do have the possibility here where we could make one higher final high, and then complete some sort of big 5 wave down for an irregular, like back down to the 1500s. Even then, that would still leave us positive for the last 2 years in general, for sure. So, I mean, I think people are getting desensitized to corrections and the scale of that, just because we haven't really had one since April. And that one was just instantaneously bought up. So what I'm really looking for, though, is I'm looking for the breakdown where this ends up becoming like your wave 1, and then your 2 and your 3 and your 4. Hopefully that makes sense. I know I'm just kind of drawing a bunch of lines here. But the logic behind it is like, eventually we're going to kind of sputter out. And what I'm kind of thinking here with the Nasdaq is we did see that head and shoulders that materialized here over the last couple of days, or really like in the last, the end of August there. So while I'm not confident in the counts that we have here for like this, this giant, this giant, wave 1, but still, I think the potential there is, I think it's reasonable. Let's just say that, where we could have something like this, where this is probably more realistic, where this becomes like a wave 1, where, typically you'll get these pullbacks here. So like if it's going to be confirmed that we're in like a downtrend, that kind of thing, like I'm really looking for this, like, this 22,700 range to break, because that's, the typical bifurcation point when you have a like a long-term sort of range. And hopefully that actually, gives us a little bit more information if it actually does happen. So we could see, like I said, like a wave 2 or a ABC, something like that, where we just had a B wave top. And I think it's realistic. I mean, it's only what, like 2%, maybe 2.5%. Okay, so almost 3%. That's not much. I mean, that's nothing for the Nasdaq. So that's kind of my overall thoughts here on the indexes, is that while, I like the charts are kind of screaming, it's time to maybe take a break here, and we should. So hopefully we can get some more viable dips. But but realistically, I think that like the volume is picking up. You're starting to see a little bit more of that institutional positioning. A lot of other analysts out there are posting, interesting data. Just general base case. You're also seeing like an accumulation here, where it's kind of forming that B sort of volume profile, which is what I like to see, because typically, this is what I mean by like the B profile, where you can kind of see that that support level here is at that 22,700 level, which is where it should be at that bottom of that wave 4 there. And then you're also seeing it here, right where that point of control has been over the last couple of days. So overall, I'd say probably next couple days, I think are going to be pretty important. But I do think that we might see like a bit more of a grind, and then finally like a rollover if we do have this bear scenario materialize. We're going to have some more supportive data for options and things like that. But like we've all been seeing, I think it's still bull market. And if you're in shorts, try to close them early. But I think that the clock's ticking here for the bulls, and they got to get something done. It is September and October coming up here, and it's a non-election year, so typically it's not very kind. Okay, so any questions about equities? Oh, you know what? Let me pull up. Hold on, let me pull up just a quick rundown here for like. So let's take a look at like SOX. Okay, so SOX, it was kind of interesting to see this today, how it didn't recover as much as the regular indexes. What I'm looking for here is like a termination around this like this 236, 237 level, possible extension down here to the bear target 2, which is at this 1.236 level, and that would do the same thing that we just went over with the Nasdaq, which was that the bottom of that prior wave 4. If we exceed that, then highly likely it's the end of like a leg or something. We'll have a rally, and then we'll have a bigger dump with like a C leg. So that's what I'm thinking about, like for SOX. Bitcoin looks like it's doing like a B wave right now, just kind of doing that stair step down. I think these guys want to try to test the 100,000 level, or like the 101 300 level, and you can kind of see that there's kind of looks like another ABC here, and that would coincide with a drop like with the Nasdaq. I mean, we've seen both of them being reduced in tandem. So I mean, really the telltale hedge here is when you look at something like gold. Gold's just that was a good call. Wish I added more, I guess. But this is kind of where I'm thinking that all the money's headed to as a hedge, as opposed to something like Bitcoin or the cryptos that are a little inflated. So let's look at something like Nvidia. Nvidia had a ton of sell volume after their earnings release, and you can kind of see here that at this like 181 level, there's just a bunch of sell delta. I think overall, if it heads down to 161, oh dog, sorry, scare the crap out of me every time. Hold on a second. Nope. Oh, I forgot to take care of it. Sorry, guys. Swear to God, man. Every time my dog just knows when to bark. Okay. So back on track here, this 161 for Nvidia, I think this is probably realistic. Then you might see something like this. And again, this is if we do see the bear scenario. There is a bullish scenario where this is like a wave 4. I'm actually kind of leaning towards more like this is a wave 4. It just looks like, just kind of looks like a flat. So anyways, long story short here is, we really need to see some sort of continuation in order for like the bear case to be confirmed. It hasn't been confirmed for quite some time, but how much further can you go, supporting the market where you got to think that like some of these institutions are just running out of inventory. I mean, at this point, it's like an options game. So whoever controls the most gamma, I guess, typically controls where the bounce points are. Let's take a look at like Tesla. So Tesla, I still think is in a long-term like corrective sort of move. I was asked the other day, do you really think it's going to go down that far? I don't know. I don't think anybody knows. I think that if the market continues to stay bull, then highly likely it'll just keep grinding around here, and we'll just have to keep expanding expanding the pattern here. But it is a possibility that you could see, if it does break above this like 356, then we could hit this 384 level pretty quickly. But it's been grinding here, pretty decent amount. So if I had to, I guess if I had my arm twisted, I would say, I think something maybe like this would be reasonable. And then you could see maybe like another run up higher, but I think we're not very close to that at this time. You can kind of see it's making that channel, or there's you typically see these triangles at like wave 4s and at B waves, but that's kind of what I'm thinking for Tesla here. But again, guys, it needs to be confirmed. So it's just speculation at this point. Everything's pretty much speculation with the market these days. All right, so MSTR. This one's looking a lot better than it was a while back. It's getting closer to this. You're starting to see this triangle wrap up here. I don't know if it's going to exceed here this ABC level. Kind of think it might if we get. Kind of think it might if we see something like that Nasdaq scenario I was showing before, where if you see this just rips down here and keeps going like that, then yeah, I think MSTR and some of those other charts like Nvidia and Tesla are going to start to sell. There's just birds of a feather flock together. So anyways, any questions about the equity side? Or I'll touch on some commodities and questions, comments, concerns. All right, I'm assuming that everything was crystal clear. You guys are no disagreements. All right, let's take a look at the yield quick. The yield has been, I think what these guys are doing is, man, this is kind of a difficult one because, ever since the job numbers have been revised, it's just been in nothing but a downtrend. And the first target here at this 4.113, I don't think that's going to be the stopping point. I think it's going to be more around maybe like an extension, maybe down to this 1.236 being like the final bear target. And that's probably if, let's say we get a rate cut in September, but I'm also kind of thinking that it's possible. It's possible because during the Jackson Hole speech, I was listening to Powell talk, and it sounded like they're less concerned about unemployment being higher and more concerned about inflation. And that's at least kind of what I gleaned from the data here. And I also kind of thought that he wasn't being dovish or hawkish. He was just saying, tariff data is coming in, inflation's a little hot. We might get a second wave here. And, if they raise rates too early, then we'll have a much bigger problem down the line here. So I kind of think, we might get maybe we get that September surprise, and all of a sudden we don't get a rate change. And then, you could see, I'm pretty sure yields would just scream to the upside. And that I think would be extremely bearish for stocks. So that's, so it's kind of in no man's land right now. I think it's just kind of, trading about until we hear news from the Fed. All right. So gold's been awesome. I do think that longer term, you'll probably hit something like 4,000. I don't like those big lofty targets, like you get from Bank of America. The analysts are like, oh yeah, market could double, 50% in 2 years. Okay, when Nvidia is already 14.7% of US GDP and, more, has more market cap than the, entire country of Russia. I think it's a little overvalued. But anyways, also too, Don posted yesterday saying that, what was it, 39% of all their sales were for two customers. That's a lot. That's a lot of your revenue to be pegged to only two customers. What if one of them pulls out? There goes your quarter, and there goes the entire stock market. So anyways, jokes aside, gold's been really good. I do think it's a nice inflation hedge. Silver is kind of catching up here. It kind of looks like sorry guys, I got to update these. I got to update these counts on the charts. I apologize. I was messing with this the other day. So I do think you'll probably see something a little bit higher. So right now we did get technically like a wave 3 extension. And if we do get some sort of pullback, it might be right around like the 40s, and then or like the lower 40s, and then it could probably head back up to right around like almost close to 44. So yeah, I mean, I do think it's breaking out. It's been in this this channel here for a long time, and it just makes sense here with gold also breaking out like this. So I'd say gold kind of looks like it's getting extended here, but probably not really. This is more of like a change in measurement. Kind of looks more of like a 3,700. There we go. It seems to fit pretty well. Like I'm thinking we might see something like this. But and then I'm sorry, like the wave 3 probably wouldn't extend, but then we would see like an extension of the wave 5, where that's where you might get your higher, like your 3,800 or something like that. Again, I'm not really sure, like at this point, but I still think you'll have to get some sort of like a test of the breakout. So I don't know. The picture might be a little bit more clear in a week. But you might not have a week to last if you're short gold or something like that. So like this isn't realistic here. I don't think that this is right. I'm thinking that gold's got enough legs to it, especially if you get like non-farm payroll that comes in soft, and then you have let's say you get that surprise or like only a 0.25% basis point cut or something like that in September from the Fed, then you'll probably get some more charging ahead here with gold. All right. Any questions about metals, yields? All right. Let's look at oil. So oil's been a little bit weird to pin down over the last couple of days. I kind of think that it's making like a B wave here. So with equities being sort of bullish off the bottom since yesterday. And then we saw kind of the reversal here with oil and also gas. If I flip the gas, had just like a really short sort of B wave. But I do think that you'll probably see a little bit higher of a retracement here, because this was really one of the first tests of that 50 DMA. And typically when it's like in between these two with the 200 and the 50, it just starts chopping around, and especially if like that VWAP is there as well. Excuse me. So yeah, long story short here, I think commodities in general are going to continue to see upward pressure, especially if the index trades are getting a little bit long. Sorry, pun not intended there, but getting a little bit long in the tooth with all this grind and these like kind of ending patterns and distribution. I think people are just going to start to look to put the money elsewhere, and you can clearly see that with gold over the last couple of days. And same thing with like silver, but oil. I mean, if things are going to slow down and the rates are going to get chopped, then I could see oil probably heading a little bit lower. I think honestly, it's going to chop within probably this like 70 to 60 range for a while, just because U.S. producers need oil at like 62 bucks a barrel or above in order to be profitable. But we're also trying to we're also considering sanctions against, the Russians' economy. So, all that stuff kind of being woven together, I still think that's just a recipe for chop, unless there's some sort of Middle East flare up over the weekend or something, which is entirely possible. But position 2 to 1 for that. I'm trying to get out of the long oil trade as soon as realistic. And if we get to this 67 level, then I think that'll be realistic, even if I have to take a small loss or something. There's just a lot of capital that's tied up and it's kind of dead. So I think we can repurpose that and make a lot more elsewhere. One last one here for gas. I think this guy is still poised to accelerate higher. We're going into the winter months here. Supplies have been all right. There hasn't really been many disruptions. And also too, if we're going to sanction, Russia, we might see more tightness of supply. That might help. That might help gas here. But yeah, so I think it's still a little bit too early to tell whether we're going to get just like, let's say, the bull target one before a bigger reversal, maybe something down here, or kind of ascends a little bit higher. So I think probably next week we'll have a lot more clarity on that. But I guess for the most part, just commodities in general, I think are pretty favorable here, except for oil. I think oil is probably going to be more of the chop around, sort of the one that kind of just dead money with that at this time. Okay, so I guess what kind of questions do you have, or is there anything that I didn't cover that you guys wanted to cover?
Nothing in particular. I mean, I did read that the Japanese bond market is continuing to go up in yield.
Mm-hmm.
So it's going to put pressure on the money coming over here.
Yeah, it'll be interesting to say the least. Have you heard anything else about the yen carry trade?
Well, that's what they're looking at. If the if the rate gets so narrow between the 10-year here and the 10-year there, then the money's going to stop coming over. That's what they're saying.
Yeah.
But it hasn't got there yet.
Not quite yet.
And it also, the fact that the dollar has been strong has been negating some of that.
Yeah. Okay. So one last thing I just wanted to share here. This is if you guys haven't seen this in a while, this is like the sector chart for the S&P. So it's pretty much any stock or every stock in each sector that's trading above their 20-day moving average. So with I guess and they've been relatively strong up until today. So today, yesterday were kind of the same, but we're starting to see that every time we see some sort of big downdraft, we see all these pretty much get sold off like a day or two beforehand. So that's it's just something to flag. I don't want to spend too much time on it, but it's just something. Okay, so one last thing, I just wanted to kind of breeze through some of these quantum stocks in case for people watching the webinars. So this one, D-Wave looks like a pretty clear like a wave 4 here, or at least like the end of like a wave 4 within like a C leg kind of thing. I think that's probably bounce pretty soon here. QUBT is now heading back to kind of back test this breakout here. I think it might just be like a little bit more like pattern expansion kind of thing. But with technical analysis, again, it is subjective sometimes. But if for the bold, you probably get away with selling some puts on these guys here. I updated all the prices today in the tracker, but and this one kind of looks like RGTI looks like a was that the call? We sell a call? I'll have to look, but whatever it is, it's pretty much trashed by now. So I was thinking about resetting that because that's like 80% in profit or 90% or something like that. So I wanted to just reset that. The covered calls and cash secured puts have been doing pretty well, except for when we first did the quantum stocks on the way up. Even though the 1-to-1 delta is nice with the stock, it still kind of capped some of those gains. But what I'm hoping to do here is, if we do see more of this, like, this price ascension here up to this high side, then start, really selling those calls. But, VIX has been so low, it's been hardly worth it for some of these that don't have a ton of liquidity. But these bigger guys have a lot of action, I guess. So IonQ is kind of like the same thing. Their pointing control is really, really close. So I think I sold a put on that or something like that a couple days ago, maybe around here or something like that. It's about the same. I think it's maybe 20-30% profit, something like that. This is the one that's getting made fun of for, but Campbell Soup, this one's doing pretty well. They had a pretty good earnings, and I saw something the other day that shocked me. It was like more people are eating at home now than they were in COVID. So it's like, okay. So that's why I'm kind of jumping at these like these goods producers, like just Campbell's Soup, and even though if it sounds kind of dumb and lame, like grandpa investing, I still think that these are good stocks to sell calls against, or like sell cash secured puts. They might not have a ton of volatility, but just in general that covered call strategy is more of like a like you're slightly bullish, that kind of thing. You can make some premium on the shares. IEP, this one's pretty much going nowhere. It's right at about valuation there. I still think that the dividend is probably the only thing that's keeping me around here, because every quarter it's $250. But by just holding a couple thousand shares, plus also we're writing some like calls and puts and stuff against it. Rocket Lab, this one I'm not super happy with. I flagged, excuse me. Sorry, my voice. I'm still not 100% from last week. This one I think is again, it's subjective with the technical analysis here, but I think it's just this back test, and I'm gonna hold on to it for a while. The sold puts on it or whatever, I think it was at like 47, which isn't too far out of the range. I mean, that's a 50% retrace at maximum. So yeah, long story short here, I think this one's just taking a quick breather. The position isn't that large anyways, and it's right at this like point of control. So I think this is actually a pretty good spot to buy back in. But I still don't want to jump the gun on that one, especially if like the rest of the market, might sell off, might. So, and the rest of these here, I think, are just also ads. Yeah. Sorry guys, I got to clean up the charts on these too. Let me see. Yeah, XLM. A lot of these are getting closer to the upper range here, but I still think that these are like flags that look pretty nice where they could break out. Exxon. Yeah, okay, here we go. So that the breakout of the flag that just happened here. Yeah, the breakout that just happened. Hopefully it kind of continues back after it does this bounce. Kind of looks like a wave 4 sort of bounce. Something kind of like this. So we'll see. Yeah, this gold one, this one was a nice buy. I wish I would have bought more. PSEC, this one is strictly for the dividends. This is pretty good. It also looks like it's at I highlighted this one. I think it was like Monday, maybe Monday or Tuesday. But this one looks like it's just right at these like generational lows. Not generational lows, sorry. But pretty low. Graham's number really just book value divided by outstanding shares. It was about half of what it should be worth. So that plus the dividend plus the super cheap shares, it's like a what was that here? What was like a 18% return or something like that just for the dividend? Oh yeah, dividend yield. There we go. Pretty good. All right. So I think that's pretty much right on time here. But any questions, comments, concerns, anything else you guys wanted to chat about? Well, I got you on the phone. Oh, GDX. Let's take a look. Yeah, this one I'd say is actually getting pretty close. These let's see. The mark signal here, this is a weekly, I believe. Yeah, it's a weekly. So whenever I get the firings or whenever I get it to fire for a weekly, that's typically like a good take profit sort of signal. But this guy here is right at that high level. I mean, I still think it could probably go a little bit higher. I mean, especially if gold's going to keep screaming up, we could probably hit 70 for a wave. Let me measure this here. Yeah. Okay. So that's kind of like, 2 fibs that kind of align here for maybe a slowdown. Okay. Yeah, so I'd say okay, so 66 is probably a good target to maybe lighten up. You could wait for a pullback, or you could just keep on holding and set a trailing stop. But at least from like a chart perspective, I think it's looking like a nice healthy wave 3 here, where we might get like a pullback to like 56 or something. Just kind of eyeballing it. Sorry, it's like a million fibs here.
Yeah.
Yeah. Okay. So like 53.5, I'd say is, if we have like we got something like this, where then you see an extension up here. I think that looks pretty reasonable. Maybe an extension for wave 5. You know, with commodities here. What do you think? That's just off the cuff. Okay, cool. Thumbs up. I'll do thumbs up. But normally when I get these DeMark indicators that fire like these 13s and 9s and stuff, you know, typically it's just kind of signals a little bit of exhaustion. I mean, you can even see like the RSI is pretty extended here. And if you were in the miners wave, which, you know, Mark, I think we, you know, talked about that before, then, you know, I think it's probably a really good return. I think I cashed out a little bit too early. But that was also when gold was about ready to take a turn down, which it did, and then it went back up again quickly. But still, you know, for the strong, you know, the miners were strong. I think that was right around here or something like that, the 50s. I'll have to look at the trade log, but yeah, that's been a pretty nice trade. Okay, anything else, guys?
I had one question,
Yes, sir.
but not about that. The study that's on the side of the chart, that shows the accumulation and distribution on the far left side, I guess it is.
Oh, are you talking about the volume profile?
Yeah. What is the name of that study?
It's called VRPR. Oh, sorry, I'm sorry about that. It's VRVP. It's a visible range volume profile.
Okay.
You could also look at something like I do the fixed range sometimes, just because like if I'm looking at a wave, and I'm trying to gauge like, you know, where we might get a pullback to, something like that. That's where I'll use that. So for example, like this wave here, you know, you can still see that there's a lot of that selling that happened like right here at that 52 level. And you know, pretty much nothing up here at the top, but that's also, you know, today. So I do use that.
It's not taking into account everything that's on the chart.
Yeah, pretty much.
Okay. So that's like well, I know with Alex, he puts on the chart of TLT, and it shows all this, what he says is accumulation down at this lower level. But I'm wondering whether if all that accumulation is from the previous wave, and maybe you shouldn't be considering that.
Yeah, it's certainly a possibility. And that's also another good
like
one.
A weekly chart of TLT.
Yeah, let me pull up the week. You know, let me get all the drawings out of here. Yeah, I mean, it kind of looks like a you know, like just a consolidation zone for sure. But I mean, anytime you have these kind of triangles that form, you're still going to see these you know, like right around the middle is going to be that, you know, up that point of accumulation, like the point of control. But I still think that like yields themselves are, or like, sorry, not yields, just bonds in general. I just don't know if it's the right longer term play. I just think that there's a lot of like systemic risk that's going on with the bond market right now. You know, like the global orders being upended, right? It's like, you know, so I'm just not buying what I'm seeing, if that makes sense. Like,
I think I'd be more comfortable with the 2-year.
Yeah, right. Something that you know, I could see, you know, a little bit, you know, further down the road here. But I mean, the dividend's really nice, but you know, I would think if we're going to have some serious inflation, the dividend's going to be great in about a year. So, so for now at least, I still think sure there could be some appreciation, especially if like the rates get lowered. But I mean, as you guys know, like when the rates start to get lowered, that's like an acknowledgement that the economy is slowing down. I mean, I don't know. It's not, it's above my pay grade, whether it's too late or too early. Those guys have a lot better better data than we all do. But I still think that, while there could be some accumulation, things like that, there's pension plans and foreign buyers and now all that stuff is being upended. And I think it's just a matter of time before we probably see, higher yields for bonds. And so TLT might head a little bit lower. I got made fun of pretty bad, when I was saying like, oh yeah, I think, PLT is going a lot lower. But I do think that you'll see something kind of like this where you'll see a lot more, maybe just some sort of expansion of this. Like, it's probably not super low like that, but you might just continue to see this kind of grind down a little bit. There's, still a lot of sell delta down here. But, I'd be a buyer at like 77 for sure, but not too much above that. Right now, I think it's just chopping around, waiting for direction. It's like we're just about ready to see some sort of shift, with monetary policy. So I think it's, it's trading in the middle for a reason. So, all right, I do need to run. It's time to go pick up the kid. But let me know if you guys have any other questions. Happy to answer them. If you want to, send a